guys, in this video I'm going to show you how you can get a trend reversal trade that we took yesterday, or some member took yesterday. So this is the market was selling, but then again all of a sudden we look for perfect buys, then we target 1 to 4. So I'm going to show you how to get a such perfect trade in this video. And I'm also going to show you all the requirements that you need to be able to perfectly get such trades when the market is trending on the downward movement. So let's get back to the video. So that is the market breakdown that we want to do now. So let's get started. So what are the requirements? The requirement is that you need to interpret 4-hour fractals low and high. Then you also need to interpret 15 minutes order flow, and then you also need to identify IDMs or liquidity points, and lastly maybe market structure. So we are going to use this template here that I always use, my checklist, to get such trades. This trade was shared yesterday in the Telegram group, link is in the description. This is the trade. So we are going to see how it played out. So let's begin by clearing out everything, and then I start explaining how we got into this trade. So the market has been on a downtrend for a while, and even yesterday we were still looking for sells. The difference is we know where the market is going to possibly high probability that the market is going to reverse from. So we are very keen to see what happens there when the market taps it. So we have to move all the way from the daily time frame. We start our analysis on the daily time frame. That is what our checklist is saying. Every day we start from marking external range marked in daily time frame, and then we go to 4 hours, then we go to 15. We wait for market to take 4 hours fractal low or high that aligns to a 1-day direction, and then we monitor order flow in 15 minutes. So here is where the trend reversal took place, because it took the opposite of what we were waiting. It took the opposite of 1-day direction, and this is the move. So I'm going to show you that we enter on the second 15 minutes order flow. I'm going to show that, and then target at least 1 to 3 or 1 to 4, and then we stick to the 10 trade rule. So basically, let me start from higher time frame. So the market has been selling. So we were expecting sales when we stepped into yesterday. In the morning we mark our highs. This is the 15 minutes. Here we don't complicate issues, charts has to be clean. So we mark our previous day's highs and low, and then where the market was going is where we are going to look for those particular trades. Like in this case, the market was selling, so we were just looking for sells, but being mindful of where the market should not touch for the sales to still be valid. Otherwise the reverse is true, we would be up for buys. So after marking this, we go to 4 hours. That is what the strategy is saying. We go to 4 hours. I only trade this one strategy. We go to 4 hours. We are looking for bearish order flow. So this is our daily high, this is our daily high, and this is our daily low. So we have to clearly mark them so that we don't get confused. So this is our daily high, and then we have our daily low here. So we are expecting the market to keep selling. Daily low. The next thing is to mark the internal range, like we've marked daily internal range in 4 hours, specifically 4 hours fractal price action. So this is this is the previous day, so we are looking to trade London and New York, so we have to skip the candles a little bit. So the following day starts by taking the low of the previous day. That means it is always high probability when it starts to pull back, so that we will take it down. But in this case, it started by pulling downward, which was not a good sign for sales. Then it pushed down. What is this time? This time is 4 a.m. we are still asleep in my local time, and then this becomes at 8 when we are about to see London open. So I come to my chart at 9 my time. That is just 1 hour to London. So I check my fractal and see what price did yesterday. What did price do? Price came, sold up to this point, then bought. You have to know how pullbacks work. Then it came again somewhere here, then came back and sold. You can see that the high of this week took the high of this one, and the low of this one took liquidity. So it means it came up to here, and then now when I wake up, I'm finding out that the market is pulling towards where it should not pass. Now if we check this, that is the fractal high, so that means I'll be marking my high like this, the internal range. So if price takes this high, we are bullish. If price takes this low, I'm in for sales. So I wake up at 9. Let's confirm that in Oanda it never took the high, but I checked in FXCM. They are the two markets that I check. Sorry. So you can see this high was rated by this, confirming that that was a valid pullback. So ideally my fractal high is there and my fractal low is here in 4 hours. So what am I expecting? I'm expecting that if this is my 4 hours low, a fractal low, and this is my fractal high. This is my 4 hours fractal high. So now again, what I'm expecting is if this high goes, if this high goes, we are bullish, and therefore the only thing that we should be looking for is to buy. If taken, we should be buying, but if this low is taken, which is our fractal low, we will be selling. So if this low is taken, we should be selling, because this low is our fractal low. So I'll be patiently waiting for this one to be taken, ideally, so that I can go in and keep selling this market. So this is 8 a.m. candle, so fortunately it does not take this. So let me show you from 1 hour's time frame. So this is 10, this is 11. So I will normally start charting from this point. At this point is where I come to the market. This is our daily low, which would have been a nice target if this market overnight pulled back, but we just go with the flow. So I start charting the market at London open my time. We see that the market is pulling back nicely. I'm expecting to see this low being taken, and then nothing is happening. It's still trying to, the momentum is still low, and then immediately it takes the high of this. I know very well that now this low may be a strong low, and therefore this sell may not happen. In this case, if I'm still actively looking for sell, I'll have to go back to 4 hours and check the time frame, so that I can again get the 4 hours fractal. But in this case, I'm very much aware that now the trend is about to reverse. So what happens in this case is now that the market takes 4 hours fractal low or high aligned to 1 day direction, in this case it has taken the opposite, so it means it is trend reversal. So I now shift to 15 minutes and monitor order flow in 15 minutes time frame and possible inducement zones. So we shift to 15 minutes and monitor how the order flow was flowing. So where is our checklist? We are almost there. So let me get the checklist so that we move with the checklist. We don't just move randomly. Sorry, I'm not feeling well, just felt like putting this video up there. So what has just happened? So immediately that high is taken, we know that now the market is highly likely to keep going. At least 8 out of 10 will always go if your fractal high is correct. Now we can see that the momentum really kicked in. The momentum really kicked in. The momentum kicked in into buy. So what happens is we have the first break, so we are waiting for the second break, then we look for our entry. So we wait for this would the first thing I mark. I'm waiting for that to be taken to confirm that truly we are in a bullish trend. So as I can see here, this is now a break of structure upward and a high probability break of structure. Why? Because it just took IDM. I'm just monitoring the order flow. It took the IDM down low here, tapped on this fair value gap and demand zone, and then read it. So I don't expect this to be broken out. So I'm just waiting for a pullback and then a push, and then I'll enter on the second one to make sure that this is not just a liquidity read. So this is my high probability demand zone. I don't expect this one to be broken if we are to continue buying. So this would be my point of looking for buys, but I'm also expecting second break, so I wouldn't just buy here. I'm expecting it to observe here, then cause another break of structure, and then I'll enter on the pullback. That is what the checklist is saying, because it could just be liquidity grab and then we change character down here. If we check again, we just got a high probability break of structure somewhere here. High probability break of structure just happened there. Why? Because it took IDM somewhere here and then pushed upward, created another structural liquidity somewhere here, and then moved upward. So this is our fractal low in 15 minutes. So I don't expect that one to be taken if this market is to continue. So I've already marked up that. So I've now monitored in 15 minutes. Now let me go to entry time frame. So enter on second 15 minutes order flow. After the first read, I wait for the second one. So the market pushes downward, nice, and then it start to range a little bit. Then we get our second push. So second push confirms that now if we are supposed to be looking for entry, so we are looking for entry on this. Now that this one has now done its past well, now we are looking for entry here. So we could enter on this one as decisional point of interest, but it is low probability. Unless you want to take an aggressive entry, then you would use a buy stop. If market pulls down here and then comes and take this liquidity and then comes and take that high, you can put your stop loss down here, but you will use a buy stop. So I'll be glad to see what the price does. So price pushes down, nice. So if it pulls back and takes this high, you can get in. Now again, there's no push upwards, and then we tap into high probability order block or demand zone, and then immediately it rejects. So I'm now waiting for the second waiting for, because now I'm in the second pullback, I'm now waiting for what is called, that you will need to also understand, which is called scope, single candle order block. So I'm just watching. I just don't take buys. I never take buys like this. This is called risky entry. Therefore you can easily be liquidated, because we are this candle here is the first 15 minutes of session open, New York session open. So I'll be glad to see what happens, and immediately session open, I see a single candle order block. So this becomes an SMT, smart money trap, and then this becomes our single candle order block scope, and therefore we now look to enter on the retest of that for at least a 1 to 3 target. Most likely you have to target at least 1.35, you have to target 1 to 3.5 for the sake of spread and commissions. So in this case, this becomes automatically, if this is to play out, this should be targeted, which is the previous day, which is still not even in the previous day's low. So overall, this is what will be targeted. So if you can hold for that long, this is going to be the next target. But in this case, we are not interested in holding for that long. So what we are interested in is getting some 1 to 3.5, or in this case, you can target 1 to 4 or 1 to 5. But now you risk getting liquidated tomorrow if the market pulls back. So what if it was just a liquidity sweep? So you target reasonably, you don't become greedy. So once that one is set, we've gotten our entry in the second order flow, entry in second 15 minutes order flow. This is the second 15 minutes flow, and this is where we've been looking for entry, preferably in scope formation. So everything is formed. Now it is just a matter of getting a stop loss or getting a take profit, because we only target 1 to 3 and stick to 10 trade rule, meaning out of 10 trades we only need to be 30% right. So in that case, we leave the market to do its thing. As you can see, immediately it takes off and TP is hit within no time. So you can see the way TP was hit in no time, and that is how we trade. So today, the following day, if you are watching this on 6th, look to target this one will be the next target, and then eventually this would be the next target, because the market is now back to bullish. But for our case, we will wait for 5th to be bullish, and then we keep longing again. So that marks the end of this video.